Great and beautiful morning to you all, wherever you're joining me at this hour. I will say welcome to 101 edition of Investdata Academy Live with Ambrose. Again, just as at yesterday, as we speak now, consider the general market this morning is missed now. Some climate of the world is experiencing a down market. Some are in green while some are still missed. Look back here in Nigeria or back here in our local market, we are seeing that our market is slightly what in red. But then when we come to the chart, I will show you what chart indicated yesterday when the market closed. But at this hour, this market across the globe are mixed, and which is as a result of what caution trading after we have seen two sessions of consistent up market on Friday and Monday. Yesterday, Monday. Today, we are seeing the mixed market as we speak now because of the key economic data that have been expected in Europe and also the central bank meeting around there, which the ECB meeting within this week. While some central bank like here today in our country, we're having a MPC meeting to see the outcome for today. But all these are factors that is shaping the market across the globe. And don't forget, because of this caution trading, people are being careful going in and the volatility also has also increased within this period. And this is why we are seeing that this market at these 2 days now have given insight, but as more earnings are hitting this market across the globe, just like as what we're expecting here, it's also going to be another force that will keep the market in either in the up direction or in a down direction. We can see that the effort of the CBN, central banks of the world, even the CBN here, to manage inflation while costs remain on the uprising. That I also tell you, is it the right strategy for the central bank to continue to hike rate? But at the hiking rate, as I said yesterday, this also you are slowing down your economy because cost of production is high already, and cost of fund also adding to it. What are we going to see? Are we going to see kind of a sophisticated economy or economy that there is no growth sign, and that is why fear of recession is around the globe, because if there is high interest rate, inflation is rising, cost of production is rising, it might lead to a recession or also inflation. These are the things we should look at this time, especially as inflation has been dominated the economic space around the globe because central banks here and there are hiking rate, and that also tells that funds that are going for investment also be looking at space. Where would they be putting this money at this time? But for me, we as investors we should also be intelligent in taking our investment decision, because this is going to affect us in terms of your profit taking, your losses, and that is why whatever you are doing, don't marry to any stock. Don't marry to any stock. Let your stop loss always guide you. Have your entry and exit strategy, as I always say, and also have your profit target. Once this is done, you are good to go. Like I said earlier, as we speak now, the US market, the S&P, the Dow Jones, and also the Nasdaq, they are all in green this hour. Then why in Europe market are down, all the stocks there, most of them are down, both the indicators, indices are down, Asia market are mixed, and oil price continue to oscillate. As we speak now, it's trading slightly below what it closed yesterday. It closed yesterday around the 106.7 dollars yesterday, but at this hour, it has pulled down slightly, trading around the 105.0 dollar per barrel. And you see that this oscillation in the crude oil price has also had a way also to continue to influence the activities in the stock market and also in the global economy. That is why you need also understand what are these factors that are behind this movement we are seeing. As we are seeing that volatility across the globe is on increase, what is the next for you to do as investor? Yesterday we saw some results that came from some companies yesterday, especially from UK. We saw how impressive that number is. Market reacted to it this morning. You're going to know this tells you that is there liquidity in the system, or even liquidity is this company having what it is that I can put my position here that at the end of the year, even the dividend yield plus my capital position will be above above inflation. That is why I said this earning season will determine where the market will go from here and where all those sectoral restriction going to be. You see, people are moving from insurance to banking to no. These numbers will speak a lot, and also as you are seeing policy change or activities going to one direction to one sector, it's going to also inform you what you expect from that sector or industry as to speak. Back home here, as the market is also waiting the outcome of the MPC meeting today, sector rotation in the face of earnings reporting season as numbers have reviewed the missed position of few numbers that have hit the market. We are seeing a missed numbers reflecting the impact of what high cost of what of production and also fund, because as you are increasing interest, cost of fund, even the cost of production is on increase. These are the things I said. Yeah, at the MPC meeting, are they likely to keep it down here? Are they likely to leave no rate at 13, or are they going to add 50 points to it, or going to add another 150 points as they did the last MPC meeting? Because yes, I know that monetary tightening is all over the world, but it's not because other climates are doing it. You need to look at what are the peculiarities in your economy before you can know. If you continue to tighten your monetary policy at the expense of who? At the expense of growth, or to attract somebody to come and invest in the economy, you need to choose to whether you are going to attract foreign investors, you want to manage political spending that we're expecting to hit the market, or really you want to make sure that the private sector have access to cheap funds to expand their business and employ Nigerians and create new employment. But it depends. That's why I said, as all eyes on the outcome of MPC meeting today, we want to see whether the rate will be all left unchanged, or it also will hike up, the hike up whether to 13.5 or to 14, where it was before coming down to 11. We want to see what will come. But if you look at the history of Nigeria and see where the inflation has been as high as this level, and what was the interest rate then, and what was the economy doing, and also the stock market, I believe we in the stock market don't need to panic. There's always some sectors that always supported the market, even when the market suffer losses for 3 years in 2014, 2015, 2016. In 2016, 2017, we saw an up market. Then we were having an interest rate, or what we call MPR, around almost 14, but market also rally. After we have seen this decline, it tells you that this rally was seen. Some individual stocks and some sectors have supported this rally. Those sectors, is there anything that is going to change them? If there's nothing to change them, that they will start seeing decline, that means those sectors will likely also take the market up higher in this second half of the year. Then it's now done on you as an investor to know which of this sector that is in position now that we are seeing this kind of uptrend. That's why that the global market is trying to bottom out. Our own has went up as the best performing market. Are we seeing a correction now, or are we going to see continuation of what? These earnings that we're expecting will tell us where to go from here. But for me, I say there's no cause for alarm, especially as rate hike across the globe is what is slowing down economic activities. That is where there's fear of recession here and there, or deflation. On this note, it is time for investors to focus on fast-moving stocks and sectors. On fast-moving stocks and sectors to hedge against what? Against inflation, or against that market, as volatility in the local and market and international are remain on the rise. For that, those that remain on increase, you need to know kind of sector you should play and kind of individual stock you should play. You remember, I always say that there are so-called strong group stocks. Those strong group is not because of their sector, but either because of the management pattern, their earnings so low, further, the numbers we are seeing, the volume, everything. That's why I say they are good kind of stuff. What sector is different? Those sectors that companies that know that they are strong on their own, either because of their fundamental, because of their shareholding structure. As I said, those special good stuff you should watch also. That's why I said this is time for you to focus or target on what? On fast moving stocks and sector to hedge against what? Against rising inflation and that market, as volatility across the globe, local and international, is what is on the rise. You need to. Not that any season, anything around it is already here. We have seen some numbers hit in the market. It is time for every investor or trader to target good stocks. If you're already in those good stocks, you have to wait and see the result. But also, this is the time that each day of the trading session of the remaining days of this any season could bring us some new surprises and also disappointing moment for what? For many market players. Because of what? This number that some will come, they beat expectation, some will come, they go below expectation. But that should not worry you. But that's why you need to have what? Your stop loss in action already on ground, so that when results hit the market, it didn't meet your expectation before it passed below your stop loss. You're already out for that because you're a trader. But for investors, they can be thinking what to do. But for you, a trader, your stop loss will always tell you when to move. Like I just said earlier, that you are not married to what? To any stock. Whether penny, whether the blue chip, whether high caps, but we are not married to them. Once a stock is not doing what you expected, what you do, that's why excess of stop loss is time for you to guide your fund and also manage risk. You move out of that stock at that particular time. That's why I said what you need to know to stay ahead of this market and to speak now, especially at any season that started, is one, understand the market general direction at any given time. know the buying and the selling sentiment in the market, and also on individual stocks. That's why when we report or publish a sentiment report on daily basis, it's not for the fun. It's for you to know where there is positive sentiment or what, or negative sentiment. That will reflect on buying sentiment or also on selling sentiment. Just like normal bid and ask or bid and offer you see when you are trading on your own platform or you are trading through any platform for in the market. You must understand to see where there is no positive buying momentum, where there is negative selling momentum. You need to understand these are the things you need. Also, you need to follow the smart money or the hot money in the market. That's why I said there's no liquidity much in the market, but there are some stocks that you are seeing that money flow is looking up on what, on daily basis, on a weekly, monthly, and also quarterly. That tells you that there's something happening in those stocks. That's why you are seeing money flow, and this money flow tells you that there's activities in those stocks. You need to also understand these are the things you need to stay ahead of the market, because you need actually to be ahead of the market as we speak. Yesterday, we talked about using the CCI, to just identify a new trend. But today, we want to also look at the true strength indicator, like I've explained it here before, just for us also to go and just look at it together before we go to the state of the market, because you know that in our class here, we need to use all this so that we understand how to use them. And when I said that you should also make time and look at those Investdata toolbox, and the one that will help you, to understand this, and they are all there. Just order for the toolbox pack. There are more than even 8 indicators that were discussed there. Then gradually you start looking at it. Before you know it, you understand and master all these indicators and know how to use them. We use them very, very well. You can see why I call up these indicators for our discussion this morning. You see the top here, when the market was here, when it was running, I tell you that the true strength recommend. You can see that the blue cross red one, you can see at a point that strength return back to the market. You saw what happened, see an upgrade. But when there was a kind of consolidation, you can see it was slow here. Remember that this one, it came down, say that there's no strength in this strength. That's why it was too long. But when the strength cross over here too, you saw what happened and it remained up. Before you can see these are what you use to also to support the index action or price action, to know what is happening. You can equally see here, that's why I let me call example here, when the blue one so called the red one, to see a sign that the market is also has crossed the 52,000 mark and also trading above the T line. You see here that also the momentum indicator also shows that strength is here. You can see, but now we're seeing another form of side trading at top here, after the market tried to form a double top yesterday when it touched as high as 52,501 before pulling back to close at 52,000 300 and something. You can see that these two here, when it tested last time and pulled back and closed over, the same thing, that form a form of what, a double top. Before we're seeing market open this morning flat here, it tells you that you as a trader need to look at what is the market doing at at any given time. Like I said, if you remember in this class that the TSI, which is the true strength indicator, help you to understand the strength behind every move. Like I said, it said the TSI, which is also oscillator, that oscillates between the positive and the negative terrain. As with many momentum indicators or oscillators, the central line define the overall bias. The bulls have the momentum edge when the TSI is positive, and when the bear have the edge, then you see the negative position of this indicator, which I've explained to you. You can see the position when you see market is weak. You can see that the bear is in charge, is starting looking down. But when the bull take over, you see the market also looking up at that particular time. That's why you need to understand this yourself, so that anytime you see all this the upturn or downturn, you must understand what is signified and what it tells you, and also you act immediately. I said a signal line can be applied to identify the upturn and also the downturn. The signal line also crossover are, however, quite frequent, but most times it tells you what is happening. That's why it's frequent, but you need to understand which area you are going. That's why as a chart reader or market player or trader that understand technical analysis, you must also use your trend to also look at what is happening. You can draw your trend here to understand what is happening. Once you're able to use this trend, it was going to help you so that it will not mislead you. And you look at also the price action or index action at that particular time. No matter what, either you are using a daily chart, a weekly chart, a monthly chart, these are also the same thing. They are very, very unique. Said because it tracks the underlying price quite well. That is why you need to follow this. It tells what is happening. Even the momentum behind the index behind the market is going to review all to you. In other words, this indicator can also capture a sustained move in one direction. When you can see it here, you can capture, like what we saw here, you can see it here, or what you are seeing here, you can see, can give you to that to show that this thing is still up. That's what it's trying to explain. That this indicator can capture a sustained move in one direction or the other. The peak or the bottom in the oscillator often capture the peak and the bottom in price. Also, in which you also know overbought and oversold. This data can also help you also to capture this so that it will help you to understand how to read your chart very well. As a trader or investor, you need to understand it. Also, it is also possible that as a trader, as you are reading this your chart, it's possible that you draw your support line, your resistance line is very, very important. This line you are drawing, also the trend line, is going to help you also to know where the support the line position of this stock or the resistant line of this product or the product you are trading or the instrument you are using or the price action you are watching. Once you're able to see this, it's going to make things easier for you to take decision. When it breaks the lines, you understand what it means, and when also cross of that line, these are why signal are generated using all this one. Like here, as you can see a buy signal here already. Yes, you'll be watching, but this is a buy signal. This also is a signal here. This is a buy signal here. This is also a buy signal. You can see sell signal here. You can see sell signal here. No, this is why you need to understand how to use this momentum also or momentum or oscillators to also go and capture what is happening in the price action or in the index action. It's very, very important in any market you are trading. Yes, back to the market as we speak now. State of the market at this hour, I'll tell you that the market is slightly in the red, very, very slightly. Market is doing a 52,257.03%. No, down 62.91%, present about 0.09% down in the red. And that is that market is slightly down. But if you look at the market red at this hour, market is positive for having a 10 gainers against the 8 losers, which is good for me. No, and this 10 gainers is led by DSK, followed by Coffee Business Solution and ICO Insurance. We have a Exchange Group, then we have a Dais Bank as the top 5 gainers. Others are Fixing, UBA, GT Code, and Owando. These are also on the gainers chart at this moment. But if you look at the losers chart, we see Academic Press topping the chart. For me, I'm not surprised. Which those in this class, I've been emphasizing take profit, take profit. I can see the smart ones are taking profit since Monday, since Friday last week, because that moved from 1 naira 11 kobo to almost 2 naira 45 kobo. That is more than 100% return, unless you're a greedy investor or you have no plan. Once you hit your target, I know between from 30% to that 100%, you have meet different investors' target, and nothing stop. If you want to take slowly, even if you are taking it, but you need now as we speak now, you can see that the stock has come back as low as 2 naira. This morning is also trading below 2 naira because of profit taking activities. The markdown date for the stock is still far, and this is how to trade when you are trading. Another stock that's on the loser chart are Japan Gold, UBN, UBN, Union Bank of Nigeria, MPN Holding, Hotel, LBN Holding, that is LBN Holding. That's you understand we are holding now one of the strong banks. Also followed by Sterling Bank. Then we see the life of MTN losing 1 naira there, and that is why the market is slightly in red. But I believe that if it can rebound back to 230 or above, market will be in green. And other stocks also coming up on the gainer start, because as we speak now, we're seeing more gainers than losers. We're going to put the market in green, but because the one of the high cap stock or high price stocks is on the loser chart, like this MTN and also and the Access Bank, these are the ones that supported the market to be red at this hour. But if you look at the volume traded so far, I'll tell you that the ICO is topping the volume top traded volume, followed by Access Corp, then Sterling Bank, and the Owando and MTN. These are the stocks that are on the top trade in terms of volume. For me, there's no cause for alarm as we speak. But as we're going to looking at the chart to look at the market, want to see what is happening in the life of Access, why it's oscillating, what can we do to Access. Owando that is just there, Just to look at the MTN, then look at is now for people that want to take decision for academic players. It's time for them to wait until it drop to the lowest level before they are jumping. Then look at what's happening in NGS and GSK. GSK and fixing, we need to look at these two charts. These are the healthcare stock that we're seeing are rebounding this week. Let's see where they are going after the price adjustment for dividend and bonus in fixing. We're seeing a rebound, more crossing 10 naira back here. For me, it's a good one. We want to look at this chart to see what actually is happening in this company that we just mentioned. But as usual, we want to call other indicators we use to look at the market and also individual stock. Now that we have the true strength indicator, we're calling up our money flow index and the exponential moving average. With this 8, we have to turn this one to 8. This is sorry, our T line. I think those are this class. I think you are used to this T line now. Yes, if you look at this chart now, look at the market. You can see market is still above the T line. You can see it here. Yeah, that's why it is slightly in red, but above the T line as we speak now for me. Then if you come to volume, volume is still below the average traded volume at this hour. But we can see that yes, the true strength, that strength is back to the market after it has crossed the T line. You can see the importance of your T line. Once you cross the current strength and return the market, you can see, and that as well here. But money flow on the chart is not too friendly at this hour. You can see that money flow is looking down. That's why I say you must follow where the hot money is. But now, general market, not from this market, we are seeing a kind of money flow looking down at this hour to read around the 25. That means a drop from almost from 32 to 25. That is massive. But don't forget that there's a line when you touch, you can see from here, let's see that with the numbers we're expected to hit the market. If this number beat expectation, we expect a turnaround on this money flow very soon. But let's look at an hour chart for the market to see what the market is doing actually. Also on the 1 hour chart, you can see that yes, market is now trading flat on the T line. You can see it here, the red. You can see, and we can see that our true rate telling us that trend is about to change, as we are seeing here. What is showing us here, you can see it's coming try to turn down. That is a good time for you to also monitor and know how to use it. There's a sign here, our money flow is looking down. After market have turned a double top, that yesterday and what happened on Friday, you can see that's why you need to also look at your candles every time you are charting. But when you give you that sign, you know that there's something on that way. You can see when I saw it when I was looking at the market yesterday night and this morning, I said this market this morning. Also, as well, all eyes on the outcome of the MPC meeting, to see whether there's another rate hike or not. That is why the market is a bit silent this morning, very calm. But let's see how it goes. Whether there is a hike or not, there are some sectors that will benefit from. If there's another hike again, I'll tell you, for those that are not in banking stocks, some of the banking stocks that have potential, that will be opportunity for you to buy them. But I believe that the banks will not benefit more because of low interest rate in the first half. Now that we're seeing kind of to improve yield in the fixed income market, and this one to impact banks but they have the money to play more in the TB market and other fixed income market because of the good fund. Like I said, that those that are doing the fixed income market, it's when you put people with good money that you make, because for those that want to really have little money that are retail investor, even when you put your money in the fixed income market, because of the low return, you might not feel much on it. But for those that are after safety, for those that are taking calculated risk and also know what they are doing in the market, I think the equity market will be a better place for you to hedge against inflation. As we speak now, that's why inflation has jumped almost 18.6 as we speak. The market rose 22. You can see that the market is still ahead of the inflation, and who individual stocks also have done so. For me, this is the time for us just to look at our portfolio and adjust one another. For those that are in good stock, you don't need to panic. Rather, it's time for you to always keep your eyes on the stock market to know what is happening on a daily basis. Even at night when you are resting, look at it so that you know what is happening to your investment. Is very, very important. Market is very calm today as all eyes are on what the outcome of MPC meeting. Today, let's see what they're going to come out with. Then let's look at what is happening in assets. We saw assets yesterday make a stronger move in the morning, but before the market closed, it closed lower. Also, the same thing happening today. Let's look at assets to see where assets is doing. For me, if you look at Access now on the 1 hour chart, I'll tell you that Access is still having that negative sentiment, self-sentiment opportunity we're seeing now. That means the stock is coming lower for but if you look at the last hour chart we're seeing now on candlestick, I see that it's trying to resist decline at this point, and we're seeing a blue buy position here. But money flow is looking down, and the truth is that there is weakness already, in the trade. That's why it's trying to cross down. You need to understand this for an hour chart. But then look at the day chart for Access Bank. Access Bank for me, yes, like I said, the candlestick here also is also trying to resist decline. For me, let's watch and see how it goes. But money flow has just turned up now. You can see it here today, looking up, and people might be taking advantage of that. This correction to around the 9.20 to go 9.55 to take advantage to buy more, as we see potential in that industry generally for going to the future, especially the second half of this year. Already in, I believe that the bank will benefit starting their third quarter and their full result with expected increase in rate playing impact on their performance or their bottom line at the end of the day. Quick one, look at what is happening in Owando. Owando is just a speculative stock. In terms of fundamental, what Owando is up to. For now, for those that have in Owando, better look at the what chart is saying. Because just purely momentum, there's nothing much else here to talk about Owando. Yes, if you look at Owando, still trying to rebound, but still slightly above, on top of the T like that, not broken out. Once you broke out, fine. For those that have been no speculation or speculating the stock, but speak now, you have to wait for the breakout if you want to buy in and take position. We are seeing a little improvement in volume, but has not yet to cross to show that it's above the average. Money flow is looking down, and we are seeing a little sign here. But let's wait and see. And this is a day chart for. Let's look at the hourly chart. On hourly chart, it has crossed the T line above. Yes, trying to stay up, and there's a positive sign here. Try to cross the red one and move off, which is good. And money flow is also trying to turn up on our chart for Owando. But for Owando, I will say be very careful, very careful, very careful. And let's look at what is happening in MTN before we go to other ones. MTN, let's see, MTN. I'll put the market slightly there. Yes, you can see MTN on the 1 hour chart is still below the T line, but trying to resist decline here. You can see this board here, and for me, money flow is looking down. The true strength indicator is also looking down on this board. Let's wait and see. But let's look at the day chart for MTN. You can see it's almost like it's trending here. Does not make. You can see slightly money flow is still very down. Fund is not entering that stock now. It's reading almost at 24. 24 is still low. Until cross 50%, and you can see this trend like that is flat now, not up, not down. You have to also watch at it. Look at it, sorry. But for me, you can see here, it's okay. MTN, you have to wait. If you are accumulating, go ahead. But that sign of accumulation here, it has not, there's no markup or markup now as we speak now. Looking at the charts or looking at the price action. Let's keep our cross finger cross for MTN. Let's look at the GSK. On the day chart, you can see that the stock is going above the T line. You can see it already, it has crossed the T line, and you can see it here. And for me, it's a good one. Even when it was trying to pull back or there was bearish situation, it didn't break down the T line. That's a good start. And we're seeing strength coming back here. If this is confirmed, that's a good one. You can see it here, sign, and we're seeing money flow flowing. If this momentum is sustained here, because we're seeing strength returning back to the stock now. That's why I said the true strength indicator that strength is coming back. And see it almost crossed one up. Once it crossed up and the price action is above the T line, money flow is positive. I think for me, this is a good sign for. And also, if you look at the candlestick formation too, you can also seen a kind of an uptrend after triple bottom here. You can see it's a good one if this is sustained at this point. From here, for me, it's a good one for GSK. But I'll quickly look at quickly look at fixing again before we can call it again a day, so that we can hear what the market is, what the statement is also saying. So let's look at here. Yes, we can see this stock on a 1 hour, on a day chart. You can see it's still below the T line, but you can see once it cross over, that will be stronger. But I tell you, the stock now after the magnet, what happened? But trying to resist decline and climb up. If that happen, you can see that it almost tested it this morning before pulling back to where it is now. But I believe that there's potential for it. Once it cross it, that will confirm the trend in this situation for for fixing. But I think let me look at fixing 1 hour chart. That will give me clear picture. You can see it has gone up, but now it is down again. But there's still hope for it. You can see what is happening here. Money flow around 32. Let's watch fixing, but I believe that there's potential in fixing. For those that are always follow my analysis on chart, I say once it cross the T line, you cannot take position. Quickly go to day chart. Yes, those that know what also that it will cross can still take advantage of the low price here. But I believe that once it cross, that will confirm yes another trend that comes. But if you look at this strength indicator, still not there that there's it's still weak. Money flow is still looking down. That's why I said for those that really want to wait, I tell you, managing your risk and also is very, very important. That's why when you confirm a signal that has broken out, when you jump in, you are with the rally, you are following the uptrend immediately. That is very, very important for you as a trader. It's good to always follow the trend. Once you follow the trend, that is very, very good. Yes, last but not least, let's quickly look at academic press. Academic press. I think what is happening in academic press. This this loss we are seeing or profit taking, how long we will take the stock so that you know exactly what you want to do with the stock. Let's look at academic press. Can see, those are always when I went to I say the distance between the two within the year before almost you can see for 3 days now the day we said it, you can see that started coming down that same day. That's why taking profit is very, very important. The market that will give you profit will still also take it from you if you refuse to act when necessary at the right time. You can see it's still taking profit, taking is still there. You can see, but money flow is still high, but still coming down already. You can see the sign here. For those that want to take position, you want to wait and see a confirm a reversal before you can jump in. For those that are there that are still profiting, no problem. For buyers, wait because they are marked down need for qualify for the 144 bonus. Is also a bit on the far it's still far, sorry, no, around August. Let's quickly look at the last one, which is NGS. Let's look at what is happening NGS group, NGS group. Okay, NGS group. NGS group on a data, I'll tell you, you can see from here, you have to short sell off here and wait. For me, that has not confirmed a breakout. You need to still wait until break out the T line before you drop. We're seeing a sign of fund entering. Here we see the positive sign here, but this sign have not really reflect on the price or to see a change in price and the price breakout this T line. That is where to jump in. That's why I say you as a trader, you have your fund and watch the market. You don't just buy for buying sake, unless you want to wait longer or you are buying in stages little by little to confirm, since you know that any season is around the corner. But if the earnings of this company maintain what we saw in Q1, the price might even go further down. That's why at this point I want you to wait to confirm a breakout before you jump in. And now we're waiting for the result. Like I said earlier, that each day could be a new surprises or a disappointment, depending on the number of on the strength of the figure we're seeing or what they come with. That's why you need to come to the market with great expectation. And that up movement on the board, keep your eyes on the market and also look at your chart, because no matter what happens, it will reflect what on the candlestick. This is how to trade. Yes, I will say big thank you for your time for today. We look forward to see you tomorrow again to discuss the outcome of MPC meeting, what they are discussed, how it's going to affect the market. Also, we might also do also a video that will also be put on the YouTube. That's why I encourage you that you also subscribe to our YouTube so that you get every update what on the market on different fora where we go for different discussion, and analysis hangout, the Q&A, or even updates on what is happening times are on the side, so that you can be carried along with the market, especially now that we're seeing season, there's also what we call sector rotation, where will you be and which stock you should also be in position. But for the stock to buy, you are free to subscribe to the buy and sell signal. So that when you log in, stock to buy for this any season, you get it there, and stock to sell. If you're a long-term investor, medium-term investor, or for your investment objective, short-term traders, weekly traders, 6 months, 1 year, when you log into the buy and sell signal, you see also the stock that meets your investment objective and go ahead and take position. Yes, I say thank you and enjoy the rest of your trading day. See you tomorrow again.